average value of 8 disaggregated asset turnover ratio for 10 selected company from 2015 to 2021 is shown in figure 1. A company's sales and revenues are compared to the value of its asset using the asset turnover ratio. The asset turnover ratio can be used to gauge how effectively a business uses its asset to produce revenue. Furthermore, the average of asset turnover for global tronic technology Berhad is 0.74773, Inari Emerton Berhad 0.95957, JCY International Berhad is 0.995957, KESM Industry 0.61531, Malaysian Pacific Industry is 0.90741, and MIE Technovation Berhad is 0.64666, and My EG Services Berhad is 0.409710, Notion Vitec 0.578180, Honesty Berhad 0.70924, and Pentamaster Corporation Berhad 0.59913. For the conclusion, My EG Services Berhad and Notion Vitec Berhad has the lowest the average of asset turnover ratio, while JCY International Berhad has the highest average of asset turnover, means that the company is effective and producing sales of revenues from its asset base.
Hi, my name is Foong Jun Woei and my metric number is 281708. So for question 2, if you can look at the regression analysis table above, we can see that it is a comparison between the average RNOA and the average asset turnover. Therefore, and as we can see, the average asset turnover is negatively correlated with the average RNOA, as shown in the unstandardized coefficient section. This proves that the dependent variable will fall by a total of negative 0.123 for every unit change in the average asset turnover. And with this, we can conclude that the average asset turnover has a negative relationship with the average RNOA. In addition, if there is a change in the standard deviation for average asset turnover, then we can be sure that the average RNOA will be influenced to drop by a total of negative 0.220.
My name is Nur Alya and I'm going to answer question 3. So first, we are going to do credit analysis. So the main purpose of credit analysis is to know about the creditworthiness of the company. It is a process on doing a review of the company condition to determine its ability to pay. So in doing credit analysis, the important part that are going to measure is liquidity and solvency. So liquidity can be seen as the ability of company in meeting its current obligation by generating sufficient cash flow. So for while usage of solvency is important in credit analysis, and it is to know about the company ability in a long run function of paying its long-term obligations. So the ratio that is being used in this credit analysis is current ratio, cash ratio, quick ratio, debt to asset ratio, debt to equity ratio, and interest coverage ratio. So for the first one is current ratio. The liquidity ratio, which measures the ability of the borrowers to pay back each debt in short-term notice. So the way of maximizing its current asset to pay debt will be one of the things that investor will look at. So the formula of the current ratio is by dividing the current asset with current liabilities. So the current ratio of 2:1 is considered the best condition of the company. So Globetronic show the result of more than 1 in all of the year throughout 2015 to 2021. Honesty Berhad is the only company that get less than 1 for its current ratio. So for this, we can say that company is not in good condition and it may not be able to afford in paying its short-term debt, as it have lower current asset than the current liabilities. We're going to do quick ratio, which also measure liquidity. Quick ratio is a company ability in covering its short-term debt using its most current asset, such as cash and account receivables. So the formula for quick ratio is current asset minus inventory and then divided by current liabilities. So the company with higher cash may be able to pay its creditors in short time periods. So Inari and Martin show the result of fluctuating condition along the years, but not much gap obtained between each others. So and then KESM Industry quick ratio show an increasing result every year except in 2017.
My name is Vincent Tan Yang Yi and my mission number is 278827. So based on the liquidity cash ratio, Malaysia Pacific Corporation has an increasing ratio result only until year 2019. In year 2020 and 2021, the company faced a downward where the amount of cash they have may reduce due to certain factors. Also, one of the factors is the COVID-19 where business having difficulty in operating it. So this shows that every RM1 of the debt company will still have enough fund to pay it back using cash. So the last one is domestic. Bahas shows the bad ratio in which company gain less than 1 on all of the year. So the last is 2019 is the lowest ratio between these 7 years. Based on the table, we can see that all of the company has less than 1 result. All 10 companies has low leverage, which is they may enjoy financial flexibility. For Global Tronic, the trend of the ratio is downward from 2015 to 2021. For Malaysian specific, Berhad may have the highest leverage compared to 10 companies. In 2021, company received 0.8499 on its debt to asset ratio. Even though the ratio is near to 1, the company still show a financial stability in company corporation. The result shows that majority of the company gain less than 1 in the debt to equity ratio. This is a bad sign as it shows that company has high liability but lower equity. The company that gains more than 1 ratio is the Malaysia Pacific Corporation, which have gained more than 1 since 2015 to 2021. The company like JCY International, we have less than 1 ratio, has shown the company finance its operation using more equity instead of debt financing. Based on the solvency table, the Globetronic and Inari Emerson has the high interest coverage ratio because the EBIT is higher than the interest payment. One of the company that earns below that 1 is Penta Master Corporation, as the result only gained above 1 in year 2015 and 2021. Among the 10 companies, there are few companies that gain a negative result. This may due to the low amount of operation income where the income achieve negative number of the cash flow.
Assalamualaikum and hi everyone. My name is Nur Syuhada binti Mohd Saidi and my metric number is 281437. Now I will explain to you how to solve this method about what are the factors affecting the selected company's earning per share and price to earning ratio. Before starting all the calculation and analyzing, firstly we need to gather the data into the Excel file by using data stream or annual report, just like what we can see on the slide, where there is sample of the data collected by our group, where we analyze 10 companies, Globetronics, Inari Emerton, JCY International, and etc. And the factors that we choose that might affect the EPS and PE ratio are like on the slide. In this slide, we will tell about the regression linear resulted from 10 companies. We use SPSS to get this figure. The dependent variable for this regression is earning per share. So we want to analyze the factor that will affect the dependent variable using the coefficient. Firstly, we will analyze the unstandardized coefficient. For each unit increase in company productivity will increase the EPS by 0.047 because there is positive coefficient between the variables, while for every unit increase in company age will decrease the dependent variables at negative 0.003. Next, statistically significant result in the coefficient table, which is the p-value for productivity, is 0.560. The p-value for company H is 0.185. The p-value is greater than 0.05, which is not significant. Lastly, we want to analyze the standardized coefficient. If there is standard deviation change in the factor, how it will affect the EPS. The standard coefficient shows the productivity and company age will influence the EPS at 0.061 and negative 0.158 respectively. For table 2 regression related to the PE ratio with all factors that affect the ratio, for every unit increase in Tobinsky will decrease the dependent variable at negative 0.729. We can describe that the Tobinsky has a negative coefficient with the PE ratio. For each unit increase in current ratio will increase the PE ratio by 90.151, and the p-value for current ratio is 0.284, while p-value for Tobinsky is at 0.874. The p-value is greater than 0.05, which is also not significant. Lastly, standardized coefficient beta shows Tobin skew and current ratio will influence the price to earning by negative 0.021 and 0.181 respectively. Okay, I think that's all from our group. Thank you.